All right, I want to look at some data here because we have, this is from Urban Digs, this is supply. There's this narrative, right, that the world's coming to an end. And so one of the ways that we can look at it in the lens of real estate is to look at data like this. These small humps are the fall selling market, and these long humps are the spring selling market. So this is the fall into winter hump, and where normally this long period happens, both here and here, you see how it got dramatically truncated over here. So this dip should have been this hump, and instead we had this dip. So that is where the spring selling market got, excised entirely. And you can see the supply starting to come back on here, but that supply should have been up here by now. So, this is a graphical representation. Is this the end of the world? Well, if you look at where we currently are, it's a little bit off of the spring highs that it should have been. But on the other hand, if you just sort of like scan your eyes left, we've been above and below where we are now. This is not, I don't know if to you, this looks like the end of the world, but this doesn't look like the end of the world to me. Does that make sense? I know you can't answer, but yeah, think about that. Okay. This is price per square foot. And this is going back to 2008. And I went all the way back as far as I could because I wanted to be able to show you what a buying and selling market does to price per square foot. And I guess we sort of maxed out over here with the exception of this hump here, which is probably new development stuff, but we maxed out sort of over here and spent sort of a slight downward play since 2016 with some notable exceptions. But this was the end of the world. This is right here is Lehman Brothers going bankrupt, right in this zone here. And this was the end of the world. And then this happened. Okay, so I just want you to think about this historically. This is roughly the same time zone. The other graph went back to 2008. This one only goes back to 2010. That's not because I'm trying to conflate the fact. It's just that that's how Urban Digs' maxes are set up for whatever reason. But I want to overlay so this is seller's market. This is buyer's market. This is clearly the hot part of the market was like 2012 to 2016, and you can see it in this zone. And by the way, this shows a dramatic buyer's market over here on the right. This is the lowest point that it's been since 2010, right? And the question is this an indicator? Does this mean that the market's going to go down by 50%? We're in the worst buyer's market, or best, depending on what you are. If you're a buyer, this is pretty good in recent memory. So what does that mean? So check this out. This is the price per square foot superimposed over the buyer's or seller's market. You guys, it's a little bit hard to see, but I wanted you to see that this is that same graph that I showed you in the last one, superimposed on the buyer's and seller's market. So when we were in this horrible part of the buyer's market, 2010, 2011, 2012, if you guys remember that, it was a bit of a slog. Look what the price per square foot did. You see how stable that is? I mean, it even went up. You see it's slightly up in this zone, and then there's an expansion in prices from 2013 to 2016, 3 years. Yeah, okay, we're in a seller's market, and you did see this expansion. Starting in 2017, we're back in buyer's market territory. What did prices do? They went down a little bit. They went down a little bit. It's not anything that dramatic, you guys. I mean, we're talking about, I don't know, a couple $100 per square foot, You know what I'm saying? So this is, my point about this is that the Manhattan market is relatively stable. Like if you look at if you look at this price graph, you're not thinking about like a penny stock kind of volatility. This is like blue chip kind of volatility, less than that. I mean, the stock market is way more volatile than this. So I just think that a lot of the news, like about the demise of New York City, is really hyperventilating and overblown. I mean, this is continuing the talk that I gave you 2 weeks ago, where I talked about this stuff then. I just want to be real clear that this looks very alarming until you look at the actual effective prices, where, you know, it just wasn't that bad. So this is resupply pace graph, and the description is on the right there. And it says the resupply is the difference. So this is not a ratio. This is something subtracted from something else. So in this case, it's the difference between the number of listings that came on this month and the number of listings that went into contract. So if there are more things that went into contract than were new listings, you end up with a negative number there. So this is 0. And anytime you're below 0, it just means inventory was pulled off of the market by demand, by people purchasing stuff and pulling it off the market. And you see that happening in a very sort of measured, predictable way. Now, if you look over here, again, looking in the context of everything that goes back to 2015 or so, like, I'm just not totally alarmed about this. You know what I'm saying? Like, I look at these graphs and I think to myself, oh, okay, this is a little different. But I am not feeling like it's the end of the world. This is the chart of the week from the Mortgage Bankers Association. This is the yellow line is the unemployment rate, seasonally adjusted in percent. And, you know, down here we're at a relative nadir of unemployment at 3.5%. This is coronavirus, and this is re-employment happening, driving the unemployment from 14.7 to 11.1. So this is, you know, thousands relative difference of people employed versus unemployed. So it's not great, and we've got a long way to go. And that first graph that I showed you of US versus Europe could create another dogleg in this graph, where employment goes back up because dramatic things are going to have to happen to lock down the growth and explosion in coronavirus cases. But this is a dramatic improvement. I mean, this is no joke. All right, this is also no joke. But the world is ending is belied by, you know, the actual statistics of millions of people coming back to work. So I just want to point that out. You know what I'm saying? So at the end of the day, there is a vast amount of wealth in real estate, a vast amount. And there's going to be an asset shift back into real estate. I think you'll start to see the bottom being laid by investors coming in and buying units. And then you will see primary residence holders starting to buy in New York City again. And that's it for today. And if you'd like to ask any questions, I'm willing to take them.